Hey everyone, welcome back to another video, and today I want to go over what I think is one of the safest plays to make options trading if you believe that Tesla is going to continue going up, or for any stock on that matter. I'm going to tell you what the strategy is and then walk you through exactly how to do it. For me, I am a Tesla Super Bull. I think based on its recent price action that it could easily go up to 7, 800, 900 within a matter of months. The plays I'm making on my Robinhood is called a call debit spread. Now, I think selling puts is actually also fairly safe if you believe in a company, but selling puts, there is the unlimited downside, meaning if Tesla were to drop significantly, your risk is potentially unlimited. Now, I think that's very unlikely, but it's a non-zero chance a stock could tank. Whereas if you do something called a call debit spread, your downside is capped on the amount you played to enter the position. So here we'll take a look at one position I placed maybe about a week ago. What happened here is I bought a call at $515 and I sold a call at $520. Now, what that does is the cost of this call, if I were to just buy it by itself, it would cost $8,370, $83.70 per share times 100. But because I sold a call at a strike price above it, I got $8,133 back. So the difference between what I bought it for and what I sold it for, it was roughly around these ranges. But essentially, the difference between the call I bought and the call I sold was about $230. So I paid $230 to get in this position. This is the max amount that I could lose. And that's basically what I paid. If this position turns against me, nothing further bad happens. I already paid the price. But now what's my upside? My upside is the difference between these two strike prices, which is $5 times 100. So $500 would be my profit and then minus the cost. So 500 minus 230 is $270. So I'm essentially betting $230 to make $270. Now, just that by itself, it's already better than a coin flip. Significantly better than the coin flip because the amount of money I put in is less than the amount of money that I could make. But what makes this way, way better than a coin flip is that I am super bullish on Tesla. And when I placed this, Tesla was actually in the lower 500s. And if you see its current share price, it's at $575. So the way I make max money is actually by expiration date. As long as the price of Tesla is 1 cent above $520, I make the full amount, which, like I said, is $270. Now, if it's below $520, I start making a little bit less and less. Whereas if it's completely under $515, then I lose the total cost I paid. And also, if it's somewhere in between, this is my break-even price. And what this means that if on expiration date, Tesla share is at $517.30, which is in between my strike prices, then the value of this position would be roughly $230. And I could sell it at $230, and this would pay off my cost of $230. Now let's place one together. First, you need to make sure that you have options trading enabled on your account. And in order to do that, you need to go to your account and then click settings. And the sidebar, click options trading. And here you'll see your options trading level. And you should also be able to apply for it here if you do not have it. So let's trade some Tesla options. I know a lot of people like weeklies, so let's do a weekly to keep it simple. So Friday, we can trade again, and let's do an expiry date for December 4th, which is just a week from this Friday. So now let's look at all of the prices. Generally, if you're bullish on the stock, the simplest way to do it is just to buy and sell right at the money, because that's when you'll get the cheapest entry points. So if I bought a call here and I sell a call here, did you see what I did there? I did it really fast. So again, buy a call at a lower strike price, let's say 2563, sell it at one strike price above it, 2458, and you can see that the total cost of this is actually $1.05. Now, is that a good price? Well, let's take a look at what's our maximum profit. So to calculate our maximum profit is 575 minus 572.5. So the difference between these two strike prices, which is $250, that's the total amount of money we could make, minus $105. So we would be betting 105 to make 245. That's really good, because think about it. Every time you get tails, you would lose $1.05. But if you got heads, you'd make $1.45. If that was a table game, I don't think you would ever walk away, because if it's just 50-50, but you're winning more money than you're losing, ultimately you would just make a lot of money. I'm getting distracted. Again, I'm paying this cost. That money is gone, but I have the potential to make 145. You click continue. Let's do one contract. And here, this is a really important part of the play. You'll see you have to set a limit price, which is the max amount of money you are willing to pay to purchase this call debit spread position. 0.7 and 1.4 is the range that people are willing to pay. Generally, the lower range is not feasible. That's just random market fluctuations. And the higher range is something you could definitely pay, because somebody will definitely take your money. Now, unlike buying a share or an option directly, because there are two legs in this contract, this will take a longer time to fill because there's more complexity. So if you want to get the best price, you can go a little bit lower. I think 105 is a great price. I would definitely put 105, but if the market were live, you would see this constantly fluctuating. And at 105, that's a good deal for you. That might not be a good deal for somebody else. So if I wanted to get this filled faster, you need to pay more. I think in reality, 105 would be hard to fill. That's just kind of what it's frozen at right now. Maybe 1.15 or 1.2 would be more realistic. And that way, 1.2 to make 1.3 or 120 to make 130 is still a good deal. Generally up to 50-50 is totally fine, because we're not just playing this because it's a cheap deal. We're playing this because we believe in the stock. So it's totally up to you. Filled faster, pay more money. A little bit more ambitious and you only want to get in if you can get it at a discount, you can play less aggressively. In my experience, if I'm trying to get the cheapest price for it, it's pretty difficult to get filled. So just keep that in mind. Click submit and it's queued. Generally, it'll say done. If you go to your account history, it's queued right now because the market is not live, but generally it'll say placed and pending. Placed does not mean it's filled yet. It has to turn into like this. That means it got filled. Otherwise, it'll be in pending. And that's basically it. The main key point, if you're just interested about the money portion, is again, as long as the price closes above the call I sold it at, max profit. If it closes below, max loss. Max loss is $230. Betting $230 for a stock I'm super bullish on to make $270, I think is really good odds, and it's hard for me not to take. And I actually have a couple of these positions open. I have one at 515 and 520. I made another one at 525 and 530, and then also another one recently, and this is when I started to get, I'm going to admit I'm getting a little bit greedy, 555 and 560, meaning as long as Tesla closes above 560 by December 31st, then I'll make max profit. I truly believe Tesla could be at 1,000 by January, so this is a no-brainer for me, but that's just based on my own analysis. Please do your own analysis and understand your own risk tolerance. If you are making these kinds of plays, only play with money that you're willing to lose. One other thing I want to take note is that, like with any of my other plays, if you've seen any of my videos, always take profit at 50%. Of course, that's totally up to you. There's plenty of people that like to take profit at 100%, but I am already gambling. I mean, trading options. I don't want to increase my risk any more than I have to. Taking profit at 50% has allowed me to very consistently make money and then protect my downside. There are periods of times where I waited and I got bit in the ass. So take profit at 50%. But yeah, that's all I wanted to talk about today. There's actually a bunch of other plays I'm making on Tesla. There's probably too many positions I'm in. It's really exciting. It's nerve-wracking. And we'll see what happens. If you have any questions, feel free to let me know in the comments below. I'll try my best to answer them. I'm not an expert, but I love teaching people about these opportunities and how to make money, because there's more than enough to go around, especially for regular people like us that are just trying to make some supplemental income, or in some cases replace their regular day jobs. And also, if you know something I don't know, please let me know. I'm always here to learn as well. Thank you all so much for watching. This is Green Knight Trading. I appreciate you all, and I'll see you soon.